The broadcast is now starting. All attendees are in listen-only mode.
Good morning, good afternoon, good evening to all who have joined this webinar. I understand that people have joined from various time zones on this webinar on commercial lending and using technology as your sidekick. Thanks for joining in. And the next 45 to 50 minutes, I'm sure is going to be a lot of information, a lot of best practices and recommendations coming from our panelists. One of our panelists on today's webinar is Joel Pruis. Joel Pruis is a senior director with Cornerstone Advisors, and Joel specializes in commercial lending, small business lending, and performance improvement at Cornerstone Advisors. Joel has helped numerous financial institutions re-engineer their commercial and small business lending with a lot of experience, which includes commercial lending, small business management at mid-size and regional banks. And also he has played a consulting leadership role at various organizations. Joel is a graduate of Calvin College and Indiana University, and he leads a lot of work at Cornerstone Advisors on commercial lending and helping banks and credit unions in terms of their transformation journey towards commercial lending. We also have Nancy Foster on this call. Nancy is the Senior Vice President for Commercial Lending at Bridgehampton National Bank. Her diverse background of last 30 years with experience in large, mid-size, and community bank credit management positions. Extremely knowledgeable person, and I personally respect her a lot for her responsibilities, which span across the credit risk appetite and implementing processes to support the strategic credit directions of an organization. Uh, Nancy also brings huge experience from the processing standpoint as well as operational support of a community bank, both from a growth standpoint and also from a profitability standpoint. Our primary focus over the last several years has been continued attention to risk management and regulatory oversight. So I welcome you all onto this webinar, and without much ado, I would like to pass on the controls to Joel and share his insights from the consulting and advisory standpoint and that side of the world wherein Joel gets involved in those commercial lending decisions and giving banks an insight about how to automate and operationalize their processes. Over to you, Joel.
All right, thank you, Ashish, and welcome everybody again to the webinar today. Going to dive right in and talk about from an industry perspective and then kind of work our way down into the specifics around the commercial LOS as it relates to the financial institutions. And Cornerstone on an annual basis does a survey of CEOs, and at the end of 2016, we had 301 CEOs respond to our survey. I'm going to share with you some of the results and our findings here. When we look at concerns of CEOs across the various financial institutions, second most important one, or the most prevalent one, was really how to address the efficiency and non-interest expense ratios and controlling the costs. So at just under 2/3, just under the regulatory burden, second comes in that efficiency play here. Also, just highlighted here as a kind of interesting item that cropped up and still relates to the commercial lending side is that credit quality, which disappeared as a concern in 2016, has now reemerged in 2017 with nearly 1 out of every 5 actually starting to see are there some particular future issues that they may encounter in the credit quality in the portfolios that they've generated within their financial institution. When we look at the growth segments, commercial lending still continues to be number one. It's been number one for the last 3 years and still going strong in that aspect. I think that covers both the commercial real estate and a tremendous opportunity that for smaller financial institutions to drive some of the C&I growth through taking of market share that's been predominantly held by the larger financial institutions. Commercial cash management and fee income, particularly as we're looking at some of the raising rate environment that we may see. Hopefully, we might see a little bit more increase in the rates, generating then more of that fee income, deposit generation, in particular the fee income, to help replace some of the fee income that's been lost due to some of the regulatory burdens and or caps that have been imposed on the financial institutions. As we look at how they're going to look to drive the efficiency within the organization, first and foremost priority is to streamline the workflows. And while that was equal to just the general improve efficiency ratio for 2016, it has clearly come out as a top priority for 2017. It's trying to streamline the process, realize that efficiencies as we get better coordination in the workflow. And from a technology aspect, no big surprise that the technology priorities are to actually, again, improve the efficiency. But second is that improve the service delivery. And when we look at from the commercial lending side, what's kind of unusual for commercial lending is that oftentimes that automation around the workflow and the process sometimes is viewed as a conflicting priority, where if we get too rigid, too rote in our approach in commercial lending, do we then minimize the overall quality of the service that we're providing to our commercial customers? Reality is we're going to go through this process today in the webinar is that that's not the case. We can have our cake and eat it too here, improve the efficiency while we improve the service delivery. From the lending technology and the plans that the IT areas have for the technology around LOSs, commercial is third in place here, but still 1 out of every 2 financial institutions does plan to do something to address the technology supporting the commercial segment. The majority of them are looking to actually just improve utilization, while only about 1 out of every 5 is actually looking to add new technology or replace existing technology. Now, my question here is, when we're looking at commercial technology and just improving the utilization, what exactly are we looking to improve the utilization of? And I'm going to go back 30 years when I started as a commercial credit analyst. The technology at my disposal then was, well, actually it was Lotus Symphony, which was a combined platform of really Word and Excel functionality. But we still had the paper credit files and the collateral files, and we had a loan documentation platform that we're using at that time. Now, over the next 30 years, the technology that typically has been added, as I've seen in financial institutions across the country, so we may have added a statement spreading platform. We've automated some ticklers that may have been done through the core, or it may have been done through a specialized platform itself. We've added some loan pricing platforms to help us determine our relationship or individual transaction profitability. We've added databases to help us figure out workflow as far as who's doing what, when, and how long it's taking them to do it. Maybe it's an Access database that's capturing our credit policy violations or underwriting guideline exceptions. And then we've created these shared folders on the network so that we can put our information there, scan and load our financial statements, the appraisals, et cetera, that are used throughout the origination process, and dump them into a shared network folder so everyone is supposed to have access to those. And then our third-party service providers have provided greater access just via the web. So we're accessing them over the internet to research, the UCC searches, certificate of existence, order appraisals, et cetera. And actually the result that we've seen from all of this is kind of a hodgepodge of things pulled together. Really not a case of true master planning here, as we've kind of tacked on various platforms throughout the process and really band-aided together various data sources and the technology that we're using. The result is that we have a tremendous number of single-purpose platforms. Any type of connectivity to, let alone the core, or to them between themselves, is really just an afterthought. So we really have no data aggregation throughout the process. Individual data silos are prevalent, and all of that's resulting in some production inefficiencies across the commercial lending process. The result from a management perspective is there's really little to no global insight into the portfolio itself. So we're losing visibility, we're losing the efficiencies in the process, and it's not delivering the service quality that we want. Now, as we're going to look to actually then implement a new commercial LOS, one of the things we have to avoid is just that proverbial paving of the cow path. And we recommend, obviously, avoid these don'ts. So don't seek to automate how things are done today. You know, ordering an appraisal, we may be able to automate the ordering approach, but if we aren't doing anything to actually affect the quality of the data that's being collected to then order the appraisal, all we've done is sped up a poor process. If we limit the roles that are involved, don't be limiting that, because then all you're going to end up with is a single perspective of maybe we're going to focus strictly on credit analysis, the underwriting aspect of it, or we're just going to focus on how do we get the information into the loan documentation platform. But we're not taking that global perspective. So while we may be improving one aspect of the origination process, we're not impacting that global process and making everyone's lives better overall. And don't be determining how you're going to use the platform once you've bought it. If you're in the middle of the implementation and now you're going to try to figure out how to use it, all you're going to do is end up elongating the implementation time, really doing some embarrassing fighting in front of the vendor, and drive up the overall costs of the implementation. So what are the do's? Well, really, you got to figure out where it is you ultimately want to be. What is that end state that you have in mind with the implementation of a platform? And really even take the implementation of the platform out. What is it that you want to impact as far as your commercial lending process? Understand that things are going to change. You're going to do things differently in the future than what you're doing today. And it's not just because of the technology, but it's because you're going to leverage that future implementation of the technology to support changes in the process, procedures, roles, responsibilities. Map out those specific roles and activities. So who's going to do what through the process? How are we going to hand off the information or queue up the next person to do their particular activity in the commercial loan origination process to drive that ultimate desired future state? And then once we have that, we go through the process of selecting the platform and then the implementation. And both of those go much smoother once we've got the first three done. As we look at the implementation itself and what we're looking to get out of the LOS platform, number one, we're going to be looking to consolidate all the data elements. So put all these individual data silos and consolidate that within the commercial LOS. So those credit memos, those call memos, the information that we're capturing in those get now turned into being captured within the LOS. Our Excel spreadsheets that we've been using are get converted into data that we capture within the LOS, and then we analyze, do the underwriting, do the number crunching within that LOS. Borrower data, the pricing, getting that loan and deposit relationship information into the LOS so that we can use it for exposure calculations. What are some of the ongoing portfolio monitoring requirements that we have? Try to replace as many of those disparate platforms. Are we able to consolidate and eliminate a independent pricing model platform, statement spreading platform, and tickler trackings, and get that all consolidated within the LOS? And by all means, we want to get rid of those independent databases that are tracking the workflow and have the LOS to handle that for us. Integrating. So we know that we're not going to be able to, number one, we're not going to replace the core system. So we're not going to try to do that type of functionality within the LOS, but we definitely do need to integrate that data into our commercial LOS, as we discussed earlier, capturing that relationship information, the loans, the deposits, the other services that we're offering. Imaging. Typically, the LOS is not that end state storage of all the documentation, because as we've got here, it's a commercial LOS. But as we've collected tax returns for the owners, do we need to make them available so that our mortgage area can then access those same source documents to support the origination of a mortgage loan for our owners? Or if it's the first opportunity that we've had from the commercial side for a customer that has a mortgage loan with us, can we access those source documents and support the commercial loan origination process? Loan documentation platforms, those obviously be integrated through a one-way push of the data into the doc prep platform. And then when we're looking at service providers, that's kind of a hit or miss and really dependent upon the ability of that service provider to allow the integration between the LOS and their platforms to help streamline that process. CRM platforms, many times the LOS does have that type of functionality, at least at some level. So there's the determination of, do we have that independent CRM platform requiring that we do some level of integration? And ideally, the type of integration we'd like to see would be real-time two-way integration so that we're not having to do two sources of data updates every time that we change some particular factor of an opportunity. The methodology in which we do capture the data also will have to change. So I'm going way back when I was a commercial lender and we had to do those traditional call memos. Gone should be the day of that traditional call memo, and reality is I come back, maybe I record that the call occurred, but now the information that I've collected while I was there on site with the customer may be, or if it was a prospect for the first time, I'm entering individual pieces of information because now it's reusable throughout the rest of the process. So the date company started, the company description, owners' names and their ownership percentages, all individual data fields that then can be used throughout the origination process, populating the approval document or reuse through any other type of form or activity that's conducted in the origination process. That indicates really kind of a change in the way that we have to look for how we're digesting the information. And the traditional method has been more that wait until the last minute and then dump the information, kind of the cram for the exam approach using the college analogy here. And that is, as we're looking at all these information sources and trying to then push the information to those individual areas, we can see that it does promote a lender to just simply wait until the last minute because I don't want to have to redo it. And that means that we've got two data dump times that are happening during initial request before we move to underwriting. And then once we've got an approved loan, that second data dump that happens before we request the documentation itself. All of this creates situations where we may be missing pieces of information through just losing it, misplacing it, or we can't coordinate well where we're going to place it for the next person to use the information. If we move towards the commercial LOS, though, here we can move into the more ideal continual review, continual digestion of the information. So as I'm collecting the information from the client, industry data, collateral data, and automating the pulls for the bureaus and from the core, I can then do continual data entry across the entire process so that as soon as I get it, it becomes a usable piece of information throughout the process itself. That leads me to becoming kind of that, as I call it, the Jason Bourne the banker approach, where they're constantly ready, they're constantly up to date of what's happening here. And as I'm looking at from the process perspective, a Jason Bourne banker knows exactly who's doing what, who's going to do it next, how long it's going to take, and I can then be communicating to my customer and saying, once I've got these pieces of information, it's going to take X number of days to get the documents and we'll be ready to close. I also, from the list of information, if I'm updating my opportunities on a regular basis, let's say all 10 opportunities come to me at one time and say, I'm ready to go, get my loan approved, but I know I can only effectively handle 5. How are you going to prioritize which ones you're going to go after? unless you know exactly which ones are the best opportunities from a profitability and credit risk perspective, and which ones really are not going to be worth pursuing. Or am I going to leave that to chance? Now, through the LOS, through this type of approach, I know which ones are going to be worth pursuing. And I know for my appointments this week, I know what information I need to collect from each one of them, who's late in submitting financial statements, who's got something coming up, an annual review or renewal. And how do I know all this? Because I've implemented, and I strategically implemented, a commercial loan origination system. As we look to the future, some of those future requirements in the next few years, look at CECL. How are we trying to improve our ALLL? If I'm looking to try to truly drive improvement in my response times to my customers, improve productivity, insight into my portfolio, improve portfolio profitability, obviously I'm not going to be able to do that if I continue to have the individual disparate data sources such as Word, Excel, individual platforms. I can best support these future needs if I've got a single commercial LOS, housing all the data and managing my workflows. So really, hey, there's no better time than now. It's not going to get easier in the future. In fact, it's just going to get more difficult, and you may be losing ground to your competitors. So now, identify your current systems. What are you using today? What's the process? What are the sources of information that you're using? And from that assessment, what are those performance drivers that are going to generate the necessary ROI to actually pay for and exceed the cost of a new commercial LOS? Design what it's going to look like in the future, and then go in and support or select your supporting technology to drive towards that future state. Okay. So with that, I'm going to turn it over to Nancy, and she's going to bring in on more of a specific customer experience and practical application within her financial institution. So Nancy, take it over.
Nancy, unfortunately, we are not able to listen to your voice.
I'm sorry, could you hear me?
Yes.
Can you hear me now?
Yes, Nancy.
Okay. So again, thank you, Joel. I didn't realize that my mic was muted at that point. I'm Nancy Foster. As mentioned earlier, I've been in the banking industry for many years in various roles. Most currently, I've been with Bridgehampton National Bank for about 8.5 years now. We're a $4.6 billion community bank headquartered on Long Island. We do have branches across Long Island and in New York City. We've been around for over 100 years. And but most recently, in the past 8 or 9 years, the bank really has gone from a smaller East End Long Island bank to a bank that has decided to compete in the New York City market space. And we've done that by growing the bank and opening de novo branches, as well as completing 3 successful bank acquisitions. And we do have plans to continue our growth and expansion. After we yes.
Nancy, apologies for interrupting you again. Can you make your presentation full screen so that everyone can, read it better?
Okay, so you're seeing the other stuff on the slide?
Yeah, just press Shift F5 and it should go full screen.
Oh, I'm sorry. Okay. I'm beginning. Okay, is it showing the whole thing now?
Unfortunately, yes. We are seeing the secondary monitor, not the primary monitor.
Okay. Okay. I apologize. I don't know why it's not showed the taskbar. No.
Maybe we'll just continue, no worries.
I can't slide it over to the screen. It's not allowing that monitor to go. Hold on a second. Okay, did that eliminate the slide now altogether? What are you
Yes.
seeing now?
Now, seeing your desktop.
Okay, I don't know how to just only, are you seeing the slide? I don't know how.
Nancy, that's fine. You can
Beginning.
continue.
Yeah.
I think we can continue. Yeah.
Okay. Okay, so I'll continue with here what you're seeing. I was up to the slide 3.
Yes, Nancy.
Okay. So anyway, after our last acquisition, we decided to have an initiative in which we would focus on the internal resources we needed to build a structure to position us better for future growth and success. The credit administration team here recognized the need to consolidate our numerous systems and processes into a more cohesive platform. And along with what Joel said was, when you have people that are just improve utilization of what you have, that's not really always the best solution. Sometimes you have to take a fresh look and think about what you really want to achieve, which is the reason why we went with our journey to success. And I apologize, I see what you're seeing. You're seeing all this noise on the screens. So our 9-yard journey to success began with kind of internally getting the blessing to launch a project. We really delved into that and kind of did a needs assessment. We looked out and saw what vendors were available for us to even request proposals from. We had a pool of vendors that we researched quite extensively. We then scheduled demos with all of the people that had responded to our RFP. We went through, we did our vendor selection. We then had a very intensive design phase. And one of the things that I think is critical about this is that you have the commitment of the vendor to come on site and really work with the people to get an understanding of what is needed. Not all banks have the same needs and requirements, so working together collaboratively in the design phase is critical to the project's success. After the design is done, then the testing, of course, is important, rolling out the implementation, and continuing to just track results, both from a quantitative measurement and a qualitative measurement. So how do you find the right solutions? I would recommend that you ask, I'm going to say 10 questions to see clearly what it is you're looking to accomplish. So first and foremost, is it a system that's going to automate your end-to-end commercial lending process? This would be, as Joel had mentioned, in that initial gathering of the application phase with customers, starting right there at the first and foremost. And even a little, you can build in even a sales tracking even before that. Before you actually gather the application, you now have customers in your potential queues for data. And building from there and having the application flow throughout the entire process, that it goes into the application processing, the underwriting phase, that it coordinates through the documentation phase, and then seamlessly transfers the data into your host system so that the loans are booked onto the system and you don't worry about that there's anything that did not comply and that it got onto the system correctly. By having everything on one simple system like that, also the ongoing review and the tickler systems that you're going to use are critical for the life of loan processing. The next question you would ask is, does it unify all your lending requirements on one platform? It's essential to have a unified system that provides a robust dashboard for strong management oversight, as well as providing the individual users with a simple view of all the tasks that they're going to have. By putting things on different systems, if you have a loan origination system, and if you have a loan tracking system, and a loan review system, and a covenant tracking system, and a annual review tracking system, sometimes it can be overwhelming for the users, and they have to sign in the morning on 5 different systems to be able to be made aware of what they're expected to do that day. So it's critical that you find a solution that unifies everything in one single platform. This way also the management, again, the management oversight, they're not looking at 5 different platforms too, to ensure that all their work is getting, the work is getting completed properly. The next question is, does it let you build your own functional differentiators? While all banks have very similar loan and deposit products, there are unique characteristics that differentiate banks from each other. There's customizable options that allow banks to tailor their products to the markets they serve. And it's really imperative that whatever software solution you select allows you the flexibility to offer products initially that were designed by you, but also to customize and change your products and policies as they align with current economic and market conditions. The digitizing of manual and paper-heavy processes is so important in today's world. Although I will date myself a little and say that many individuals in the credit world find it very difficult to let go of the paper. I think still today you have some of the older analysts and underwriters who print out every spreadsheet and look and check the boxes almost in an audit fashion, and they like to have the paper in front of them. But that's really not the wave of the future, nor is it the way typical millennials who've grown up so much more accustomed to working in a digitized environment. They're very much more comfortable. Obviously, you can see my challenge with digital. I can't get all the screens to work properly here. But, you know, that's not really the typical bankers of today. And they're very much more comfortable with picking up borrowers, getting borrowers' information in a digitized fashion. It's actually a risk nowadays and it's not really acceptable for a banker to pick up borrowers' tax returns and ride around with them in their car or their briefcase until they decide to drop them back at the office. The risk of fraud and getting that information in the wrong hands is so intense. So it's really important that whatever solution you choose, that the customers can access a secure customer portal in which the customer or their accountants can upload documents in a much safer environment, as well as the bankers can interact with customers, whether it comes down to transporting our documents that we need to have signed and executed into a secure portal so that they don't get in the wrong hands. And it's much more efficient and less costly rather than printing out all this paper. So I think, you know, digitizing manual paper-heavy processes is critical to any organization in today's day and age. Does it accelerate deployments for faster time to market? I had mentioned previously about, you know, your own functional differentiators and what makes you unique and different than your competition. But again, we're not in a world of where we just keep things status quo. There's always some new technology, new products coming to market, and we're looking to change. And if you choose a vendor that has like hard-coded so many of the processes, they cannot easily make changes. So in selecting a vendor, it's real critical that they give you the tools that you need to have at your fingertips in order to be able to change workflows or business process rules that will enable you to configure new policy and procedures relatively easy and simple in a test environment, and then you can deploy it to the rest of your staff and be out to market with new technology. Does it allow the automation and configurability of credit policies? Somewhat along the lines of what I just mentioned, that, you know, a credit policy and adherence to it are kind of the strong pillars of an organization's performance. And if you don't have the risk culture that an organization is embedded within the principles of its policy, and you don't have strong checks and balances on that policy, while you try to, as a manager, to look at everything, it's much better to have a system that the policy can be written into. So this way, if you're underwriting a loan request and it doesn't have adequate debt service coverage ratio, it's flagged as an exception. Or if an individual isn't going to be guaranteeing the loan, that too, if your policy would require it and the lender wants to go forward with that condition, it's flagged as an exception to policy. So we all know, you know, and I talk a little bit now from both the credit risk side of the equation, regulators are all over these days about exceptions to policy. They look at institutions, they want to know, are you not, you know, not only are you underwriting loans prudently, but how many exceptions are you making? So you need to have a system that can recognize when loans are truly exceptions to policy, and not only just flag it in the workflow, but you can quantify by generating reports out of the system that not only tell you the number of exceptions, the type of exceptions, and what products exceptions are being made for, and what lender is making exceptions. So it's very important that you can configure your credit policy into the system. As I mentioned, you know, right at the beginning slide, does it integrate seamlessly to the core banking system? So while we talked about a throughput automated approach right from the beginning of the application all the way to getting the application booked on the system, the integration also needs to come back the opposite way as well, so that when a lender is meeting with a customer, they can pull in the customer accounts from your core system and have an understanding of the total relationship with the customer. That certainly becomes critical in the credit underwriting process to understand how much aggregate exposure you have outstanding to a customer and the relationship from the deposit side. So it's important that it's very integrated with your core banking system and to allow for the automated booking of the loans. So it's really a two-way integration between your loan origination system and your core banking system. Again, I talked from the risk side, compliance through proactive management. You know, compliance with regulated guidance is critical not only at the individual loan level, but also at the aggregate level. And I think, you know, the changing, although from Joel's poll, you know, he said that regulator concern is not as high as it was previous years. That tends to go year by year. And I think we all are very mindful of what the regulators are looking for and what we can provide them. And it seems that no matter how much we provide them with data, it's not enough. So certainly a loan origination system that provides proactive management capability and the aggregation of data and understanding all the steps in the loan process and making sure whether it's from a compliance perspective, that come from outside appraisals and the reports that come from our flood vendors are all aggregated and maintained in the system for ongoing portfolio management. One of the things that, you know, mobility, and we all tend to be wed to our desks at times, and certainly lenders nowadays, as I mentioned previously, they used to go out and get applications and bring them back to the office, and sometimes it was 3 or 4 days until the paperwork made it back to the office and the start of application processing. So by integrating with the loan origination system that allows for mobile access and a tablet, we can have lenders that are sitting with our customers in their offices or at their accountant's offices, not only filling out all of the application data, but can allow for the scanning and the other document retrieval that is so critical in the process. The more proactive bankers meet with customers and enter and upload documents, well, as I said, right in their initial meeting, because if you don't capture that, and it's sometimes you're leaving that meeting and the promise to follow up that the accountant will send in the financial statements, and in the meantime the accountant says, oh no, you should go talk to the bank down the street, I hear they're better. You've lost that opportunity. So a real differentiator is be able to complete a transaction on that initial call by using mobile devices right at the customer's place of business. And lastly, does it empower people and enable them to make better decisions? So the system of choice has to really be designed with all the previously mentioned functionality. But at the end of the day, the true test is how empowered your credit team feels to deliver the highest quality product to their customers. Again, software that supports their needs while providing control and efficiency is really a win-win for all. And so, having been through this process at Bridgehampton National Bank and having gone from, I'll say, Joel's slide of where the master planning, and we had a loan origination system, a tracking system, a covenant tracking system, and it almost looked like the slide where he had the mobile homes all stacked on top of each other. By entering all that into just such a unified, cohesive platform, it has enabled us to really get a better understanding of our entire loan portfolio, of all the steps in the process of where we stand, and has enabled us to create much more robust reporting out of the system. And we continue to, have ideas with going forward for the future. So when I talked about Bridgehampton's Believe in Beyond initiative, it never ends. There's always going to be a change that you're looking forward to make. And having a platform that can handle that, and you can have configurability, and having a great, I think more important than the software is the relationship with the vendor and their willingness, their desire to understand your organization, your aspirations, your values, and work with you to complete that. It really becomes a partner and a teamwork approach as opposed to just a client and a vendor. And I think that is probably the key to what I would have to say about, there's software out there, but it's also the people behind the software that really make or break the relationship. And, I wish everyone who embarks upon this, I encourage everyone to really evaluate your current system structure, and is it appropriate to repair or totally replace what you currently are utilizing to fulfill your credit process. And with that, I will turn it back to Ashish.
Thanks, Nancy. Thanks, Joel. Thank you for all the insights that we got on, with your sessions. And we got the perspective from an advisory perspective from Joel, and that's what, certainly guides the industry. And certainly from you, Nancy, from a practitioner's perspective, having gone through the journey. What I'm going to talk about in the next 10 minutes is more from a solution perspective. And while both of you were speaking, I was noting down a couple of points, because as an organization, that's what we do. We try to keep our eyes and ears open in terms of learning from people like you and our customers, in terms of understanding where the trends are, what are the new technologies, what are the solutions. And let me take a quick dive into the solution side of it, from the problems that we have heard and what solutions we recommend to our customers. We all understand that commercial lending is extremely complex. We understand that every customer is unique, processes are people intensive, and operations are document intensive. With all that said, commercial lending is and always has been one of the big bread earners for the bank, but always has been one of the neglected areas because of the inherent nature in which commercial lending was being done. It was because it was a people-intensive process, and a lot of that knowledge resided within the people. I guess the understanding of how technology can enable those people in doing their work better and more efficient, and how the banks can become more efficient in delivering a customer experience was always ignored. But I guess in the last couple of years, we are seeing that big shift in terms of when we go back to our customers, like Cornerstone does this a pretty big and good job on surveying the executive team in various banks. We went back to commercial lending officers and tried to understand that what gives them sleepless nights. I guess a couple of things have been touched upon by Joel as well as Nancy, but some of the things which we really think are very important, the integration in between and the collaboration between the front office and back office. That's one of the key areas, because the relationship manager, after having initiated his work or her work, doesn't know where the underwriter is on the work. The underwriter doesn't know where the risk rating is on it, where the credit administration is on it. So there are operative islands, and I would like to use that term of operative islands because these are the places which are operational silos or black holes in a bank. And the reason I call it operative islands because these are the places where the work just stays over there. Neither do people have a visibility of work is lying over there, nor do they have the accountability and empowerment to do anything on that because there is no visibility on what is lying over there in those operative islands. And that's the number one problem that we are trying to solve right now. And this is one thing that we keep on hearing from the bank executives in the commercial lending space of how to solve that problem. One of the other things that I would like to touch upon is certainly in terms of a complete end-to-end lending process. Joel did speak about change and the way in the last 30 years he as well as Nancy have seen things changing from people using Excel-based spreadsheets, and in a bank that we are working, they had around 31 different disparate applications through which a commercial lending function was being delivered. Now think about it, the same scenario when new age competition is coming in and the marketplace itself is becoming competitive with lesser number of originations, but every origination needs to be profitable. One way of doing it is that just by putting people to it and trying to solve that problem. But that's no more an operative model for a bank. From a bank's perspective, what is important is that to have a complete visibility of where the work is getting originating, giving the relationship managers or brokers a complete visibility of their work as well as giving them a visibility in terms of tracking of where the work is. From a risk manager's perspective, how can it be automated so the work is standardized across the lending process? How can you resolve the issue about a broken lending process, which not only leads to duplication of work, but a lot of redundant work down the line? Is there a solution? I don't think there is an ideal solution, but yes, there is an adaptable solution to it. What we frame out as CUP, or a configurable unified platform. Every single word in this particular phrase that we use for configurable unified platform has a meaning. The reason for having a configurable platform is a faster go-to-market. Gone are those days when banks used to have an approach of build versus buy, because both the approaches had their own positives, but then again, both the approaches have their own big negatives. Because once you're building the application, it requires abundant supply of resources, time, and money. And no more banks are in that wave of developing something from scratch. The other way was in terms of buying something which was off the shelf. It did solve a problem for the problem that existed at that point of time, but it did not solve the problems that would be coming in with the change that Joel mentioned, which is coming in the banking space, whether it is from operational standpoint, customer experience standpoint, or regulatory standpoint. And that's where there was an in-between approach, and Nugent does credit itself with the first business process management based commercial lending application, which has almost 80 to 90% of the best practices of commercial lending already embedded into it. But then again, as Nancy said, every bank is a different bank. Every bank has got a different nuances, and they are unique in their own way in serving their customers. How can you make sure that that 15 to 20% is being embedded to make it a right fit solution to the bank? And that's where a configurable unified framework comes into picture. The other thing that we always kept on noting was that a bank tried to solve a problem. Say, today I have a big CNI portfolio and I try to solve that problem. Tomorrow my CRE portfolio is growing. but my solution does not support that. I get into the small and medium business, I get into the SBA side of it, I get into asset-based lending or agri-financing. Now, can I invest in one platform that I can use today for my current pain points, but use the same platform or expand and scale up the same platform to solve multiple problems across the bank? And that's where the methodology of BPM with solution accelerators, which are pre-built into the solution, comes into picture. We have seen this so many times, and I've spent around 22 years in banking, and I do realize that when I'm on the other side of the table, I see what is the pain point in terms of that broken lending process. The biggest problem with that part is that neither can you address that process because there are so many disparate applications that are working, there are Excel sheets, the credit risk is getting calculated somewhere else, there are Word documents coming in, imaging is not there, so the documents are coming in a paper format. And then again, the biggest problem in terms of attracting the new age customer in terms of mobility-based interfaces, enabling your relationship managers and empowering them so that when they are in the field, they can use mobility to capture the information at the point of the origination and speed up the entire process. The whole idea is to hook up the customer and make sure that the customer is part of the process rather than customer being the end of the process. A little snapshot in terms of an end-to-end loan origination solution or a platform. You would see that there is an omni-channel approach through which you enable your customer to approach the bank in whatever ways it's convenient to them, and then taking the complete 9-yard journey through the application in terms of an end-to-end process, starting from the relationship manager, originating a deal till the time a review and renewals process happens, and then providing you with a real-time dashboard about how things are working in a bank, where things are happening, where exceptions are happening. Nancy brought out a very interesting point about exceptions and management by exceptions. And it is becoming increasingly important when we interface or we do our briefings with the regulators, that at that point of time, they not only want that why exceptions happen, they want a complete tracking of what was being done to solve those exceptions. So is there a process? Has the process been audited? Has it been documented? And that's where this complete chain of dashboards comes into picture. Finally, leading down to, from a loan review perspective, how can we speed up that entire process? How can we give that dashboard? It's easier said than done, but with an adaptable or a BPM-based platform, you can generate a lot of reports across the platform, and these reports are completely configurable. And you would see that starting from a sales dashboard to a risk dashboard to an executive dashboard, you can have any level of information. A lot of senior execs, especially the chief credit risk officers and the CEOs that we interact with, they come back to us that they're always looking for information. They're always wanting to have the information for which they have to get back to their people, and there's a lot of dependence on that. And that information, if it is not in real time, it is not an actionable or insightful information. So how can we make sure that that information is available through real-time dashboards to the people inside the bank? And finally, from an ROI perspective, these are some of the ROI accelerators that we have built in. So when we work with banks, we do offer them a test drive, which means that how can our team work with these banks in terms of creating a business case for them? Because within the commercial lending space, there is a lot of sitting on the fence phenomenon where people know that automation is important. People know that it will help the bank to be more profitable and be more efficient, but how to do that? So I think that's where we step up in terms of a ROI-based model to ensure that we step up the process, understand the various steps, and then help them in terms of identification of what areas and what problems to solve. Finally, about Newgen, we are a global organization. We call ourselves a global organization with a local mindset, which essentially means that all our experience from 61 countries where we operate with more than 2,500 employees, and certainly, with a lot of information help and support from our customers, our partners, advisory firms like Cornerstone, Gartners, and other people in the world, and specifically from our customers, we listen and we see that what things are coming up and try to work towards those solutions in a preemptive manner in order to make sure that our solutions are there for our banking customers. Finally, give us an opportunity, and we can always be there to help you out with your commercial lending related process automation initiatives. and with the test drive that we have. Thanks, everybody. I'll open up the floor for any questions at this stage.
Our first question, Ashish, is for Joel. The question is, ours is a mid-sized bank with a growing commercial lending portfolio. Can you give some recommendations for making a business case to our executive team for commercial lending automation?
Yeah, when we look at our clients and help them with that business case, many times what we're looking at is the ability of the process to allow for, increased production and or increased portfolio size that is held by each individual commercial lender. And the only way that you can get that is by, streamlining the process, coordinating the activities so that the lender is not spending as much time, as Nancy talked about, being chained to the desk and is out in front of the customers, but still driving the origination process. And so many times the business case is either built by you're able to expand the portfolio with current headcount. You may have to realign the resources a bit to kind of get the right level of FTEs behind the right level of, the appropriate activities and so forth. But the increase that is able to be generated through the process redesign and the automation through a platform like a new gen platform is substantial and more than pays for the technology investment.
Thank you, Joel. Our next question is for Nancy. The question is, can you elaborate on the test drive process from NewGen?
I'm sorry, can you repeat that?
Can you elaborate on the test drive process from NewGen? I think this question is for Ashish, it looks like. So, Ashish, please feel free to chime in.
Sure. I mean, I can take the first shot on that, and then maybe Nancy can add. So basically, it's important that when banks are sticking out, and when banks are taking this initiative about and commercial lending is not a small initiative. It's a transformation for the bank, and I guess it's important at that point of time that banks do go across the process of their due diligence. Certainly, Bridgehampton Bank went through that process. It's important at that stage that for us as an organization to understand that what are the priorities, what are the pain points, where is the process breaking up, and try to work with them in terms of building up not only a business case, but also showing it to them and being ready and available for the bank in terms of the test drive kind of a thing, wherein you either create a prototype or show it to the bank in terms of how the processes are right now and how the processes can be post automation. So that's very important. So NewGen does conduct that test drive for most of our banking partners, wherein if they want us to come in and our team can come down over there and enable their processes and try to show it back to them in terms of a quick turnaround. So that's an approach that we take as an organization, but certainly Nancy can add to it from their due diligence perspective or what they see as important from a success parameters perspective.
Yeah, I will add, I'll say it's kind of an iterative approach, and we took the approach of getting people from every aspect. So lenders that, are normally not involved with decisions like that, we had a team that was comprised of a lot of different individuals from the documentation, operations, app processing, lending, from management perspective. And it was interesting because I think some of them are so, tunnel vision. They have tunnel vision about the way it's getting done today. And to them, that was the only way things could get done. So exposing them to the possibilities of the way it could get done if we changed and we made a change. And some people didn't readily know that'll never work. That's not the way we do things here. No, I can't just do that. I need to do it this way. So by allowing them to really see the potential of what could happen before a final product is delivered helps to get their buy-in along the way, so that by the time they're actually getting the product, they already have a comfort level, and they've become like the cheerleaders. So while you don't have every lender or every app processor or every underwriter, they're going back to their teams almost like enthusiastically saying, wait till you see what we're going to get. And I think that process worked very well, and I would recommend it, as opposed to keeping them in the dark about the development and then just saying, well, here it is, take it or leave it.
Thanks, Nancy. That really helps a lot. And thanks, Joel and Nancy, for your time on this webinar. And certainly these insights would be helpful. And to all the audience in the webinar today, we will send you a recording of this webinar, as well as if you have any questions for Nancy, Joel, or myself, please feel free to connect. And we'll be more than happy to be a part of your journey and maybe helping you with any kind of recommendations that we have along the way. Thank you very much, and you have a great day ahead.
Thank you. Bye.
Thank you.